Imagine waking up tomorrow morning to find your bank account frozen. Not because you committed a crime, not because you failed to pay a debt, but because you shared the wrong opinion online, because you donated to the wrong cause, because an algorithm decided you pose a risk to social stability. Your credit card doesn't work. Your phone won't let you buy coffee. The bus turnstile rejects your payment app. And suddenly, in the most prosperous society in human history, you're invisible, powerless, cut off from the very system that promised you convenience. This isn't science fiction. This is the world we're building, one digital transaction at a time. And the terrifying part? We're cheering it on. Welcome to the hidden ledger, where money, power, and history collide. And nothing is ever as simple as it looks. The death of cash isn't just about technology, it's about control. And once you see the pattern, from ancient Rome to modern China, you'll realize that the war for your freedom is being fought in your wallet. Every time you tap, swipe, or click Pay Now, you're voting for a world where every purchase is monitored, every transaction is tracked, and every dollar you spend requires permission. Cash is the last vestige of financial privacy, and they're killing it on purpose. The illusion of progress. They sell it to you as convenience, as progress, as the inevitable march of technology making life easier. No more fumbling for coins, no more waiting for change. Just tap, beep, done. The future is frictionless. But friction isn't always bad. Sometimes friction is freedom. Think about it. When you pay with cash, the transaction is final, anonymous, untraceable. The government doesn't know you bought coffee this morning unless they're physically watching you. Your bank can't see that you purchased a book they don't approve of. Your employer can't monitor your weekend habits. And no algorithm is building a psychological profile based on whether you buy organic vegetables or fast food. Cash is the financial equivalent of a private conversation. And just like private conversations, it's becoming extinct. The numbers tell the story clearly. In Sweden, cash represents less than 2% of all transactions, according to the country's central bank. South Korea is racing toward the same endpoint. Even in the United States, surveys show that nearly 40% of people could go an entire week without using physical money. We're not just adopting digital payments, we're abandoning the alternative. But here's what they don't tell you in the glossy advertisements. Every digital transaction you make is a data point in a surveillance system that would make the East German Stasi weep with envy, and once cash is gone, really gone, there's no going back. Historical pattern. Ancient Rome's control system. This isn't the first time a civilization has faced this choice. In ancient Rome, the government understood that controlling commerce meant controlling people. But they didn't need digital technology to do it. During the later empire, particularly under Diocletian in the 3rd century after Christ, Rome implemented what historians call the regimented economy. Citizens were assigned to specific professions by law. Bakers had to bake, farmers had to farm, and everyone had to accept government-issued coins at government-dictated values. But here's the crucial detail. Diocletian's edict on maximum prices in 301 AD attempted to control not just what money was worth, but what it could buy. The edict fixed prices for over 1,000 goods and services, from grain to labor wages, with death as the penalty for violations. Citizens needed government approval to change professions. Soldiers received rations instead of coins to prevent them from spending money freely. The system wasn't designed for efficiency. It was designed for control. Every profession was regulated by the state. Every price was dictated by imperial decree. Every citizen was locked into the economic role assigned by Roman law. Sound familiar? When the Western Roman Empire collapsed in 476 AD, one of the first things that happened was the return to barter and local currencies. People fled from the controlled, monitored economy back to direct exchange. They chose the inconvenience of primitive commerce over the surveillance of sophisticated systems. Because they understood something we've forgotten, when your transactions require permission, you don't own money. Money owns you. The Swedish experiment. If you want to see the future, look at Sweden today. It's the world's first society to voluntarily eliminate cash, and the results are chilling. In Stockholm, homeless people carry card readers because no one has coins to give them. Children receive digital allowances managed through apps their parents control remotely. Churches take donations by QR code. Even street performers need mobile payment systems to make a living. The efficiency is undeniable. Transactions are faster. Tax evasion is harder. Crime rates have dropped because there's less physical money to steal. The Swedish government proudly points to these statistics as proof of success. But scratch beneath the surface, and you'll find the hidden costs. The vulnerabilities became clear during banking system stress tests, when Swish, Sweden's primary mobile payment system, experienced outages in 2018 and 2022. Commerce ground to a halt. Stores couldn't process sales. Public transport failed. Even emergency services struggled because backup cash systems had been dismantled. Elderly Swedes, many of whom never learned to use smartphones, found themselves unable to buy basic necessities. Rural communities lost their banks entirely because digital-only systems don't require local branches, and small businesses discovered they were paying transaction fees on every single sale, a tax that didn't exist in the cash economy. Most disturbing of all, Swedish authorities now have a complete record of every transaction made by every citizen for the past decade. They know your habits better than you do. They can predict your behavior. And if you ever step out of line, they can shut off your access to the economy with a keystroke. The Swedes traded privacy for convenience, and once the trade was made, there was no going back. Eskutritham. China's social credit system. But if Sweden is the appetizer, China is the main course. The Chinese Communist Party has built the most sophisticated financial surveillance system in human history, and it's powered entirely by digital payments. In China, cash isn't illegal. It's simply irrelevant. Mobile payments through WeChat Pay and Alipay handle over 80% of all transactions. But these aren't just payment systems. They're data collection networks that feed directly into the government's social credit system. Here's how it works. Every purchase you make, every place you visit, every person you pay generates points in your social credit score. Buy alcohol too often? Points deducted. Purchase books the government doesn't approve of? More points lost. Travel to certain provinces? Your score drops further. And the score determines everything. A low social credit rating means you can't buy high-speed train tickets. You can't book flights. Your children can't attend good schools. You can't get loans, rent apartments, or even access dating apps. In the most literal sense, your purchasing power determines your social worth. The consequences are real and documented. In 2018, Chinese courts banned 17.5 million people from purchasing airplane tickets and 5.5 million from buying high-speed train tickets due to low social credit scores. Liu Hu, a Chinese investigative journalist who exposed official corruption, found himself on a government blacklist. He was barred from taking flights. His daughter was denied access to a private school, and his social media accounts were restricted. The system had turned financial capability into a tool of political control. This is the endgame of cashless society, a world where every economic action is political, and every political action has economic consequences. The Trojan horse of convenience. How did we get here? How did free societies voluntarily construct their own cages? The answer is simple. They made the cage so comfortable, we forgot it was a cage. It started with credit cards in the 1950s, a convenience that allowed you to buy now and pay later. Then came ATM cards, making cash access easier while creating digital records of every withdrawal. Online shopping normalized typing your financial information into websites. Mobile payments made your phone into a wallet. Each step made sense in isolation. Each innovation solved a real problem. But together, they created something unprecedented. A financial system where every transaction requires technological infrastructure and institutional permission. And here's the crucial insight. Once you become dependent on that infrastructure, you become controllable by whoever operates it. Consider the Canadian truck drivers' protest in 2022. When demonstrators occupied Ottawa to protest vaccine mandates, the government didn't deploy the army. They deployed the banks. Protesters' accounts were frozen. Donors who contributed $20 found their financial lives disrupted. Small businesses that served coffee to demonstrators had their payment processing suspended. The protesters had cash, but it didn't matter. In a digitized economy, cash alone can't keep you alive. You need digital access to pay rent, buy insurance, purchase fuel, and maintain a phone contract. The Canadian government proved that in the modern world, financial exclusion is more powerful than physical force. This wasn't tyranny, as we've historically understood it. There were no midnight arrests, no secret police, no gulags, just the quiet flipping of digital switches that made certain people economically invisible. And the scariest part? It worked. The coming Central Bank Digital Currencies. But even these systems are primitive compared to what's coming next. Central Bank Digital Currencies, or CBDCs. These aren't cryptocurrencies like Bitcoin, which operate independently. CBDCs are digital cash controlled directly by governments, the final merger of state power and financial surveillance. Over 100 countries are already developing or testing CBDCs. The European Union is piloting the digital euro. China has launched the digital yuan in major cities. The United States Federal Reserve is studying a Fed coin that could replace physical dollars entirely. They promise the same things they always promise: efficiency, security, financial inclusion. They'll point to legitimate problems: money laundering, tax evasion, financial crimes. And they'll be right about the problems. What they won't tell you is that the cure is worse than the disease. Because CBDCs aren't just digital money, they're programmable money. Every unit comes with built-in rules about how it can be spent. Imagine cash that expires if you don't use it fast enough. Imagine money that can only be spent on government-approved purchases. Imagine currency that shuts itself off if you travel to the wrong place or associate with the wrong people. This isn't speculation. Research papers from central banks worldwide are exploring these capabilities. The European Central Bank has published studies on holding limits and negative interest rates for digital euros. The Bank of England has researched programmable spending categories. China's digital yuan trials have included geolocation restrictions and expiration dates for certain test transactions. The Bank of International Settlements has published frameworks for conditional payments in CBDC systems. These are not implemented features. They are active research areas, but the technological foundation is being built. The legal precedents are being established, and once the infrastructure exists, the temptation to use it becomes irresistible. We're not just talking about surveillance anymore. We're talking about control at the molecular level of commerce. Every dollar becomes a government agent, programmed to enforce policy through the marketplace. And once physical cash disappears entirely, there will be no escape hatch, no backup plan, no alternative system to fall back on when the digital cage closes. Historical precedent. The Weimar disaster. History shows us what happens when governments gain total control over money, and the lesson is always the same. Power corrupts, systems fail, and ordinary people pay the price. In 1920s Germany, the Weimar Republic faced massive war debts and political instability. Their solution was to seize control of the monetary system completely. They printed money to fund government spending. They implemented currency controls to prevent capital flight. They created new regulations to direct credit toward socially beneficial purposes. For a brief moment, it seemed to work. Government programs were funded, employment rose. The political crisis appeared to stabilize. But the foundation was rotten. By 1923, German currency had become worthless. A loaf of bread cost billions of marks. Families wheeled barrows of cash to grocery stores, only to discover prices had doubled again by the time they reached the checkout counter. Life savings evaporated overnight. The middle class was destroyed. But here's the detail that matters for our story. As the official currency collapsed, Germans found ways to survive. Some turned to barter. Others used foreign currency when they could get it. Local communities created informal exchange networks. But these weren't comprehensive solutions. Millions still suffered devastating losses. The alternatives were partial, difficult, and insufficient for most people. Still, they had options. In today's coming cashless society, there are no alternatives. When the digital system fails, and history tells us it will fail, there's nowhere to run. No backup plan. No parallel economy to cushion the collapse. The Weimar Germans could flee from their currency. In a CBDC world, the currency follows you everywhere. The resistance option. So what can you do? How do you protect yourself and your family from digital financial slavery? First, use cash whenever possible. Every cash transaction is a vote for financial privacy. Every digital payment is a vote for surveillance. The choices you make today determine the world your children inherit. Second, diversify your financial options. Don't put all your wealth in systems controlled by institutions that could freeze your accounts on a whim. Precious metals, cryptocurrency, barter goods, foreign bank accounts. Spread your risk across systems that operate independently. Third, support businesses that accept cash. When you patronize cash-friendly establishments, you're keeping the alternative system alive. When you choose the digital option because it's slightly more convenient, you're participating in your own enslavement. But most importantly, understand the choice we're facing. This isn't about technology versus tradition. It's about freedom versus control. It's about whether you own your money or your money owns you. The transition to cashless society isn't inevitable. It's a political choice disguised as technological progress. And like all political choices, it can be resisted, delayed, and ultimately reversed if enough people understand what's at stake. Every empire in history has eventually tried to gain total control over its people's economic lives. Rome did it with tokens and permits. Medieval kings did it with currency debasement. Modern dictatorships do it with price controls and rationing. But none of them had the tools we're building today. None of them could monitor every transaction in real time. None of them could program money to enforce government policy automatically. None of them could create a prison made entirely of convenience. The cashless society isn't the future. It's the trap, and we're building it ourselves, one transaction at a time. When China's social credit system was first announced, Western observers called it dystopian. When Swedish elderly couldn't buy food because they didn't have smartphones, we called it a transition problem. When Canadian truckers had their accounts frozen for political protests, we called it an emergency measure. We're always one step behind, always making excuses, always believing it can't happen here. But it is happening here. The infrastructure is being built. The precedents are being set. The legal frameworks are being established. The only question left is whether you'll fight for financial freedom while you still can, or whether you'll wake up one morning to discover that your money requires permission you'll never receive. Cash is dying, but it doesn't have to. Every time you choose cash over card, you're casting a vote for financial privacy. Every time you support businesses that value your economic freedom, you're building resistance to digital tyranny. Every time you refuse to surrender convenience for control, you're fighting for the world you want to leave behind. The war for your financial freedom is being fought in grocery stores and coffee shops, in parking meters and tip jars. It's not dramatic. It's not heroic. But it might be the most important battle of our lifetime, because once cash is gone, it's never coming back. And once your money requires permission, you're no longer free. You're just a well-fed slave with a smartphone. The choice is yours. But you have to make it now, while choice still exists. History doesn't repeat itself, but it sure has a way of rhyming. And if you don't learn from it, it will crush you all the same. If this opened your eyes to what's really happening, hit subscribe. The truth is worth spreading, and your financial freedom depends on it.